Hey guys, welcome to another episode of the Texas Blockcast. I'm Lee Bratcher. I'm joined today by Robert Valdes-Rodriguez of Abra. Abra is one of our member companies, and Robert is the global head of sales there. He has 25 years of experience previously in global financial markets, and we're going to talk a little bit today about what they're doing, what they see in the marketplace, some exciting news that we're actually hot off the press, breaking here on this podcast. So, Robert, thanks for joining us.
Well, thanks very much, Lee, for inviting me and having me on. Firstly, just want to say thanks for all the great work you guys do in the crypto industry on our behalf, specifically with the mining companies and the mining industry. But all in all, really, really, really thankful. It's great work. Thanks.
Well, we appreciate it. We work our hardest to make sure that we're creating a positive regulatory climate and letting the innovators build and companies like yours prosper. So before we dive into Abra's business lines and kind of some of these new strategies and some of the commentary around the halving and a lot of things that are coming up, tell us a little bit about those 25 years of experience in financial markets. What did you do before coming to Abra?
Yeah, so I've been at Abra just about 3 years now, and before that, really spent all of my time in traditional financial markets, leading and building foreign exchange and other global markets, sales and trading businesses for some of the big global banks. Um, and again, really advising corporations, advising investment managers, and having all of our teams advising those types of clients on their currency exposures and other types of risk management, financial markets exposures that they have. So it became really, really natural for me, having been an FX expert, like to try to understand and research Bitcoin and crypto because of had so many different commonalities, 24/7, the globality of crypto. Really the fact that it's being used as a potential financial payment segment and technology, all of that really was easy transition for me from being in the FX markets.
Right, that makes sense. And you shifted over to Abra 3 years ago, uh, global head of sales there, and you guys are really coming out with a lot of different product lines that I think people don't know. I think people know about your retail, offerings, but you've got offerings for institutions, for miners, for all sorts of things, and even a new one that we're going to break today, a new client type, if you will. So just tell us a little bit about those various business lines and kind of where y'all's focus is.
So Abra is really 100% focused on institutional and wealth management. We are one of the leading crypto prime services, wealth management providers in the industry. We've been around for actually a decade now. So we're in there about as long or longer than really anyone in the industry.
Like
And we have
50 years in crypto years.
yeah, exactly. And we've got great investors with the likes of American Express. So we're just really fortunate to have to really be one of the pioneers in the industry. If you look at the two major areas I mentioned, prime services, that's the part of our business where we cater to institutional clients, with our services being OTC trading, spot, derivatives, in hundreds of the majors and altcoins. And we really built what we think a business as close as you're going to find to a Wall Street trading desk as you're going to find in crypto. And then shifting over to the wealth management part of our business, that's really part of, and we can go into the announcement later, but we just were approved as a SEC registered RIA. So we in under that umbrella, we will be serving wealth management clients as well as institutional clients on yield strategies, investment strategies, and under what we call an SMA. It's called a separately managed account structure. So very, very, very exciting. We believe we're the only crypto native provider with this type of designation. So we think it's really important to have gotten, and we're really proud of it. It took a lot of work from everyone on our team.
Well, congratulations. That is a big deal. And the SEC is not in the habit of just giving those out. So I'm sure that was quite a bit of work and some legal bills probably as well.
Yeah,
Okay,
absolutely.
so when you're talking about the institutional counterparties. You're doing some OTC stuff. You're building a trading desk, kind of like a Wall Street trading desk. How does so say a fund or an institution comes to you and says, we want to get some exposure. What does that conversation look like? What are you, sort of what kind of um, products, I guess, within that slate of institutional products will you be pointing them towards?
Yeah, so that's it's good that you mentioned that we trade with funds, but we're trading with funds, with other crypto native types of ATM operators, of course the mining companies, VC firms who have a lot of holdings um, in not only major currencies but also altcoins, quantitative funds, et cetera. So really the whole gamut of institutional investors, and of course including high net worth and family offices through our new through our new RIA. And so the things that we built, we built this institutional grade trading desk. So for clients that require instant fast trading, we have a state of the art trading API that is aggregating all the basically the best prices in the market. We're connected to all the top global liquidity providers in the world. And we're providing that type of liquidity and access to, again, to not only all the major currencies out there, but also hundreds of other types of alt currencies. Um, and we built it from the back to front. It's not just a kind of us doing the sales and then doing the trading. We were very, very conscious that building an institutional grade type of offering, you needed to have institutional grade settlement operations, an account management system where we're kind of building that white glove service that a private banking type of Wall Street trading desk would also be giving their clients. And we took that kind of model and we created that type of UI for our clients, and we're really proud of it.
So on the OTC side, are you guys like sort of matching orders a little bit? And how does that functionally work with digital assets where, the keys are then you mentioned institutional grade custody, institutional grade processes. What does that look like? Obviously it's happening very fast, and sometimes probably just through API and algorithms. Is there a typical process that would take?
Yeah, so depending on the type of client, whether it's an API or whether it's a manual type of trade where we're working a very block order, it's very simple where clients will pre-fund, our Fireblocks wallet, for example, and once it's pre-funded, we go out there and execute the business for them or put a price on it, and then they trade. We then deliver, and settle with them almost instantaneously.
Mhm.
If they're not sending crypto and they need to send a wire in first, we'll get that wire, convert it for them, and then do whatever trades they need to do. But again, it's all very, very seamless, almost instantaneous. And the times where we have to wait is really when we're waiting for if the banks are taking a little bit longer or so on. But most of everything is done pretty instantaneously. And like I said, because of the connectivity that we built from a trading perspective and a technology perspective, we're connected to all the best pricing in the industry, and we have an aggregator that delivers best pricing to our clients.
Right now, what are you seeing as far as like the biggest pairs? Is it from the institutional side? I think you can obviously look this up because blockchains are public as far as what, Bitcoin and ETH pairs are looking like. But are you seeing a ton of just, is it mostly USD to BTC, or there's a lot of BTC to ETH BTC? What are you seeing?
Well, over the last month, no doubt, over the last probably 6 weeks, no doubt that the largest pairs that we've seen is the Bitcoin USD, right? BTC USD, right? BTC USDT, BTC USDC. And that's really a function of not only the huge amount of flows that we're seeing from the newly approved ETFs, spot ETFs that are all Bitcoin, right? But as we're going into the halving, we're also seeing quite a bit of activity from the mining companies, either getting prepared, increasing their hedging, or putting policies together on their auto liquidations and all that, and all of that's Bitcoin. So I would say the majority of the flows we're seeing are Bitcoin, but we're starting to see clients line up on ETH and on the altcoins as well. They've been lagging a bit. And that's something that we're starting to see a little bit more momentum come to the market. There's a lot of feeling in the market that ETH is going to be the next ETF. Who knows if it is or not? But there's some clients out there that are starting to position themselves for that. And then on the altcoin side of things, again, market participants, clients that we're seeing are thinking, you know what, those have lagged. Let's start getting into some of those for them. They're gonna catch up to what Bitcoin has been doing, and they're positioning themselves for that as well. But by and large, Bitcoin is the alpha male for now.
That's fascinating to think through, like when you see like aggregated kind of consumer pairs versus institutional pairs, and like there's probably a significant difference there right now, it sounds like. Okay, so we talked a little bit about those institutional clients. Let's dive in a little bit further on the mining clients. You guys serve miners and probably in a very similar way, but kind of walk through, say a miner doesn't want to just hodl all of their their block rewards, and they're wanting to be very thoughtful as to how they maximize the return for that product. Or I'm calling it a product, because it's sort of like what they have expended all this capex and energy and opex to create, which is certainly the wrong terminology, but I think helps folks think through, the process of mining, then liquidating these assets. So what are those conversations like, and what kind of products are you honing in with for miners?
Yeah, well, that's a great question, and you kind of like described it perfectly. So first, the way we service our mining clients, we give the same like white glove, high touch service to all the miners, regardless of their size. So you could be a small miner who's producing 1 Bitcoin a day, or one of the larger public miners who's producing 60 Bitcoin a day. The attention we give them each is the same white glove kind of high touch. Where things start to differ really depends on the need and sophistication of the actual mining company, right? Of the actual miner. So let's take one of the small miners who's producing 1 Bitcoin a day. What's important to them? So they basically they're auto liquidating every single day. They want to make sure that whoever they're auto liquidating with, first of all, it's an API straight through processing, almost zero intervention, where it's automatic. The rewards go pointed directly into a wallet at a certain time during the day. That wallet is executed at the market, liquidated at the market with an almost instant US dollar wire that ends up in their account either later that day, depending on when it was liquidated. It may come in early in the morning. And that's very simple, and that's basically the majority of what they need. We start going into some white glove service with them when they need some customized reporting. For example, they need to have a report that matches the report they're getting from their pools, right? And we want to make sure that it's consistent, so it's easy for them to reconcile. That requires some of us to do our development team to do some customization, right? And that's just a very simple type of business that we have for some of the smaller miners. But now we start moving into the needs and the sophisticated requirements of a larger miner. Now we start getting into some more strategies. So, okay, yeah, they definitely want auto liquidation, but they may not want it every day, right? They may want it once a week, or they may only want to, because they're producing so much, they want only a portion. They only need a portion to be liquidated. So we have built very customizable auto liquidation for them to be basically whatever parameters they need, whether it's a time parameter or whether it's a portion of the rewards, we can customize that for them. And then they even get even a little bit more sophisticated in how do they want it to be liquidated. Instead of it doing it all boom at the market in one shot, we're able to offer them an algorithmic type of strategy with like a TWAP, trade weighted average type of performance, where it does it over time. And it's a little bit more, sophisticated execution. So we're able to do all that for them on the auto liquidation side. And again, it's very, very customizable for them. But in addition to that, they have a lot of other needs as well, right? So especially as we're starting to get into the halving, which is really important, they may want to start implementing a hedging strategy, right? Not just on the auto liquidation where they're selling the rewards as they come in, but they're sitting on a huge balance sheet, some of them long Bitcoin, right? And they want to be able to hedge themselves against adverse price movements in the market. We have a very active options trading service, so we're able to offer them, simple options hedging where they're either buying puts and selling calls. That's called a collar or a zero cost risk reversal, and it gives them an opportunity to put some parameters where they're hedging, and it doesn't really cost them that much. It protects them for the downside. Some of them want to say, you know what, I want to use options to not only hedge myself but create some yield. So we've been able to construct Bitcoin call writing programs for them. So every couple of months, they're selling calls, out of the money calls on Bitcoin, and which generating a yield of close to 18-19% a year annualized on their holdings. So again, those are really more sophisticated type of strategies, not only on the hedging side of things, but also on the yield producing side of things for their Bitcoin holdings. And then even going a step further, because some of these larger Bitcoin miners not only have Bitcoin holdings, but have significant cash holdings. They have a balance sheet that have cash, right? And we help them put that cash to work, right? And that's where our RIA comes into play, right?
Yeah.
So we're
So they can get some treasury yield or some other kind of, yeah.
100%, yeah. And one of the beauties of the RIA for a miner, or one of the large miners who's a public company, some of them, is number one, they know that they're going into a vehicle, a separately managed account. A, they own it. B, it's registered with the SEC, so there's a lot of safety there from a regulatory perspective. We, as an SEC registered investment advisor, we're bound by that fiduciary responsibility, and again, that's something that's very comforting for them. And then one of the more important things to them is, especially in the light of the last cycle that we had in 2021, 22, where there was concerns about counterparty risks and so on, whatever yield strategy or treasury management strategy we're putting them in, and in that separately managed account, they own it. We don't own it. It's not commingled with other users or with anyone else. They own it. Something happens to Abra, God forbid, they still hold the keys. And they own that everything that's in there. So that gives a lot of our mining clients a lot of comfort. And again, it's something that's starting to become very popular. So those are things, I just described a lot of things for some of the larger miners, but they as they become more sophisticated, we're able to service most, if not all, of their needs. And I'll add one more thing that we do for them, and that's a lot of them require capital. As we're moving into the halving, they want to buy as many machines to mine more because they know the mining rewards are going to be going down by half in May. So maybe they want to buy some more, get mining as much as possible. So maybe they want to borrow. And so we'll provide opportunities for them to borrow against their Bitcoin holdings. And we can structure some very, very kind of innovative type of loans for them to give them some more leverage. And again, it's all over collateralized. So it's really, really interesting service that we can offer them.
So as far from a tax perspective, right now, since a lot of the miners hodls, their basis is lower than what the price is part of that, the strategy that you guys are employing with some of the options to optimize like a tax strategy for them? Is that in the conversation?
Not really, no. We don't give tax advice, and the strategies that we implement don't have a tax bent on it. The only thing we'll do that will be more tax related is the reporting that we give them. We make sure that it's kind of conducive for that they can give to their accountants and CPAs or their auditors. But what we really try to do is make sure that we're focused on helping them hedge adverse price movement more than anything else.
Yeah.
On the yield side, of course, there's going to be probably some sort of tax realization that they're going to be experiencing, but it's not an area that we give advice on.
So, okay, I have another question on the yield side of things. So the institution or the miner that's got significant Bitcoin on their treasury, they're seeking that 18+% yield. And you said it's off the money or out of the money calls.
So yeah, so those that's
break that down. Yeah.
Yeah, so that's part of our prime services. They're offering. So they're holding on Bitcoin, and say they own Bitcoin from whatever whatever, let's just say they own it today. Let's just say they own it today at 65,000, right? And that's where that's where they're going to mark their book. Well, they could be selling out of the money calls, right? And out of the money calls means something around, let's just say December 2024, 75 or 85 or 100,000 strike, right? Way out of the money, right? So what happens during the life of them selling these options, right? They'll sell these calls during the life of the option between now and December. At time of expiration, if the spot price of Bitcoin is below that strike price, let's just say it's below the strike price, let's just say it's 75,000, and let's say at time of December it's below 75,000, then they've taken in that premium, the options expire worthless, and that's it. They go home and they've been able to take that yield and that premium in, right? But let's just say that it does finish above that 70,000. Now it gets called away, right? So at time of expiration, what they'll have to owe Bitcoin that's going to be equal to the difference between the market price. Let's just say we're at 75,000, strike price is at 70. So this difference between the 70 and the 75, that difference of 5,000 Bitcoin is what they'll have to owe based on how many contracts that they've done with us. So they won't have to sell the whole notional amount of the option, just the difference between the strike price and the current market price at that time. So again, it's really advantageous to them because they're not really, they have the Bitcoin already and they're already selling at a much higher level, and they're only selling the difference between the market and the strike price. And if they do that on a consistent basis, every 3 months or every 6 months, it becomes a program where they can generate, potentially even 18 to 19% on such a program.
So I guess that's a pretty significant yield. I guess is the risk there that they've got shorter calls that are in the money, and I guess what's the downside there?
So because they have the Bitcoin already, they're covered, right? So whatever Bitcoin they might be selling, that's because of being called away on an option that finishes in the money, it's Bitcoin they already have, right? And it's Bitcoin they already have that's being sold at a higher level. So if they're only doing a portion of what they own, then that portion is basically almost like taking profit at a higher level. They're not participating if on that amount if Bitcoin goes up
Above that.
higher that level.
Yeah, I'm tracking now.
So whatever Bitcoin they do own, don't forget that they're making money on all that underlying Bitcoin that they own because the price has gone higher. So in general, the reason it's such a conservative and very attractive program and strategy for miners is because they already have the Bitcoin, and even if they were to get called away, they're only going to be basically just taking profit on that amount that they have on there for.
Well, thanks for indulging me on that. I'm not an options guy, so that was quite informative. Let's shift now a little bit to this RIA that we've been talking about. Now, you guys are now in a position as a crypto native company to have the registered investment advisor licensing, and are advising high net worth clients and institutions. How have you found sort of the demand from that? Like, are you seeing that other RIAs who are not informed on this industry are hemorrhaging clients to you guys, or is it more relationships that you already had, and now that you have the RIA, you're providing them those services?
Yeah. So first of all, it's an SEC registered. We're registered as an SEC registered investment advisor.
Yeah, license was the wrong term. Registered investment, yeah.
So I would say that as being one of the few, the conversations with not only clients of ours, but prospects who we're starting to come out, the feedback has been overwhelmingly positive in that now they have an opportunity to go into an investment strategy, really, where they, I'm not saying that there's, zero risk. There is. There's no counterparty risk in that if something happens to Abra, that they have to worry about losing their funds. And that's the number one biggest problem why many investors really retreated the market, that they did back in, in 22, 23.
And is that because of the separately managed accounts?
Separately managed accounts, correct. A separately managed account, which is an SMA, let's just say fund, a mining company or a corporate treasurer or family office has a certain, let's just say it's Bitcoin. We have a Bitcoin yield strategy that we will put them in. Again, as their advisor, we are implementing that strategy for them in that separately managed account. It's only theirs, and there's no one else in that separately managed account. And whatever returns are being generated from that really are theirs. We take a management fee. We don't take a spread on anything. It's whatever it's being implemented is 100%. They generate 100% of that return minus the management fee, which is a small management fee that we take in order to be the advisor who's basically implementing that strategy. Yeah, and that's basically how it works.
So are you finding that you're getting clients that want you to manage a diverse portfolio, or are you just getting folks that are saying, hey, why don't you manage my digital asset portfolio? Or is it the whole thing?
So we get clients that say, hey, I'm interested in earning yield on Bitcoin, and we can put them on a Bitcoin yield strategy. I'm interested in earning yield on Ethereum. And we're offering them an opportunity to get yield on an Ethereum, and then they have a US. I'm interested in getting yield on USDC. So between those three and Solana, for now, those four are the ones that currently that we're offering yield. Plus, they actually hold the actual the actual crypto in their SMA. So whatever capital appreciation that goes on there, plus the yield is what they're generating. But we can offer that. We can offer 4 separate strategies for them at the moment.
Awesome. Yeah. So it's probably not somebody who's just transitioning their entire portfolio over to equities and everything, bonds as well.
Right. No, we're not seeing that. It's really the ones who are either new clients or new investors who are starting to allocate percentages of their portfolio into crypto. This is very easy. It could be a crypto native mining company that has a certain amount of treasury that they want to put into a separately managed account to earn yield. It could be USDC. It could be their own Bitcoin. We're putting them into that strategy. So far we're definitely setting ourselves apart with this.
Tell me a little bit more about y'all's strategy kind of going into the halving. Are there pretty big implications for those yield strategies?
Well, first of all, I think the funding, because the rally that we have seen in Bitcoin and in crypto, the funding rates have gotten really, really high out in the forward market, right? So there's a huge amount of demand. The yield strategies have become really attractive right now because of those funding rates. So as the market has been, as active as it's been, thanks a lot to a lot of what we've seen from the Bitcoin ETFs and the anticipation of what's going to be going on into the halving cycle. There's been a lot of activity, and right now it couldn't be a better opportunity right now to be able to take advantage of yield opportunities.
Yeah, I was going to say, is that why the yield is so high? It probably like 6 months ago would have been more like sub 10% probably.
Well, the options yields that we were talking about before, that's more of a function of the implied volatility in the market that's been very, very high. That's a function of that. On the SMA yield strategies that I just described, that's more of a function of A, the demand, and B, the funding rates, in each of those areas.
Okay.
They're somewhat correlated, but they are moving independently.
Yeah, I not causal, that they could be correlated, probably are correlated. Okay. What else does the listener need to know about Abra and y'all's, I guess, expansion recently?
I would say that, Abra, one of the things that we're really proud of is, getting on the other side of this bear market and being in a position to, really offer top tier trading and investment services to a very wide spectrum of clients, all institutional, and wealth management / family offices as well. During the downturn, we spent a lot of time building. Right, it wasn't easy to do that. So we put technology investments, people investments into building what we consider to be a top tier trading operation, and then spending a lot of the time, as you alluded to before, in making sure that we secured that SEC registration. So now we stand in a pretty compelling and commanding position to be able to service almost any need from an investment and trading perspective across a pretty wide spectrum of clients. And again, even on the RIA side, I don't think there's any other crypto native firm like us who has that designation and that ability to service with those SMAs.
Yeah, I think the closest to it would probably be Rick Edelman's outfit with Digital Asset Council Financial Professionals, but they were an RIA way before digital assets existed, so they're not crypto native.
They do a lot of great work, and a couple of RIAs that he's working with that do a lot of work, that really great work. I don't think any of them are creating a yield service in the way we are, which I think is one of the things that really is different.
I'm curious to, a year from now or 6 months from now, check back in with you and see like that process probably has increased your inbox as far as inbound interest in those products.
Absolutely. It's been really exciting, and it's I think it's going to be really phenomenal year with that amount of not only of the offering, but just the way the market's moving, and what we expect, the tailwinds that the market has in this cycle, I think are very exciting, and something that I don't think we've seen in other cycles.
Sometimes timing is everything. Sounds like you guys have timed it pretty well.
Yeah.
Congratulations for that. Where can people go to find out more about you and all of Abra's offerings?
So you can just email robert@abra.com or globalsales@abra.com. We're on Telegram as well, and we're very, very, very easy to find. And if they can't find us through that, I'm sure they hit you up, Lee, and you can put them in touch with me and with our team.
Well, yeah, we'll certainly make the connection. Robert, thank you for coming on the show and for educating me a little bit on some of these more complex products, and the listeners as well.
Well, thanks, Lee. Really appreciate having me. Really, really did. Thank you.